All right, welcome everybody. We have a few hundred people joining the call today, so I'm going to let everyone join, and as they come along, we'll take care of a little housekeeping. As we go on today, because of the nature of the webinar format, it can be hard to answer questions on the fly, so please use the chat box or the QA box to drop questions in along the way. I will try to keep an eye out for them, or we can also maybe at the very end, if there's time, be able to look at questions, answer them, or we'll be able to, we'll show you how you can contact us, ask us directly, schedule some strategy time with one of our Altos team to dive into the data and some of the mechanisms. It's been a month since we did our last webinar, and wow, what a month it's been. I figured today we will start with by looking at the current US real estate market, all the data up through May 1st. We've been doing these videos each week as the new data comes in over the weekend. For those of you who don't know Altos, we track the US housing market. We track every home for sale in the country, every zip in the country, every week, and then we bubble up the analytics for those of us who care about that. In what I'll be doing today is I'll be looking at the data that's already come in as it's changed over April, and then what it's pointing us to for May, June, and July, the summer months of the selling season. We've got the real-time view as well as the leading indicators. I'll try to spend a little bit of time on what they're showing us. Once we talk about the data, we'll also use that in our frame with how we are communicating with clients, what matters right now, how people what they need to hear from us, how they're going to make decisions. And then I'm going to spend a little bit of time with the Altos system in specific, so you can see how you would dive in and get the data and communicate to folks. And then at the end, we can wrap up with, how do we do our one-on-one time and get people rolling. Okay, let's start with the current market. So on April 1st, when we last did a webinar for folks, we had this immediate home price reduction, the market reaction to the beginning of the crisis. The lockdown started, the emergency mode started taking over, and there was an immediate price reduction. You can see it in both lines on this graph. The top line, the blue line, is our median home price. So this is every home in the country for sale right now. It's currently at $329,900, and it dropped immediately in March. What's interesting is that this home price number has been climbing week over week for 3 weeks in a row now. The orange line is the median price of the newly listed cohort. So what we do is track every house listed for sale, and you can track every house that came on the market this week. That cohort is a very powerful leading indicator because it's a wisdom of the crowds example where the sellers, the listing agents, know exactly where the demand is, and they know that, for example, if there's demand happening for properties the beginning of April, the next listing they get, they price it a little more aggressively. Or conversely, if they think there's no buyers, the price drops down. So the orange line on this chart is a leading indicator for the blue line, which is leading for transaction prices in May, June, and July. What we see is that home prices fell initially. So they fell initially in March. They're 1.5% lower than last year at this time. That's the orange dots on the blue line there, last year. But in April, they were up 1.5%. So we are to our highest point all year. And we are also with the newly listed cohort ticking up week over week. That implies price strength into May. So when we look at the difference between the newly listed cohort, the orange line, and the blue line, you can see when the market is particularly hot, these lines compress. The newly listed cohort climbs faster than the overall market. New properties coming on getting priced quickly. So that's a signal. 2 years ago, beginning of 2018, you can see the two lines converging here. At the end of 2018, mortgage rates started climbing, and the newly listed cohort fell off more quickly, and the two spread. So to start at the beginning of 2019, there was a big spread, and it wasn't until each week in 2019, when rates were falling, demand was picking up, you can see these lines compressing again. This year started off very strongly. Through March, we had strong price appreciation, and before we had our March correction, mid-March correction down. So you can see it across the board. The key here is that we can see it immediately. We know that the price of the properties that came on the market this week is impacted by the demand that agents, every agent in the country is seeing out there. And so that implies our strength continues into May. This, by the way, is happening across all price points in the market. So Altos tracks every market, whether it's at the national level like this chart or down at the zip code level, in price range quartiles, price range segments. The high end of the market may be behaving very differently from the low end. What we see when we look at the price range segments for the US is that all 4 price ranges are ticking up week over week, climbing week over week. So the price strength is happening week over week. And all except the highest price range are at their highest point of the year. The top of the market, the top quartile there, is still below its March peak. And because it's a little more volatile, it adjusted more directly, more quickly down, and hasn't yet recovered to the highest point of the year. However, all the other price points have, and all 4 of them are ticking up. So when we're talking with folks who seem to be a bit incredulous, especially I've noticed as we do more videos each week, and week over week in April are like, it's kind of surprising, but prices are ticking up. The more we talk about that, the more pressure, feedback we're getting that there must be something wrong. How could prices be up if the economy is so hard? Well, I'll show why, but I think one of the important messages here is that it's true across all price points across the country. So there are some markets where it's down, second home markets, for example, corrected down more quickly. But in general, across the country, prices were robust in April, week over week, climbing 3 weeks in a row. And really, it's a supply and demand thing. We are in a situation of crazy low inventory. There's only 738,000 homes for sale in the whole country right now. The top line on this chart, the top chart here, you can see year over year. Normally this time of year, we'd have 1 million homes for sale, and there's 738,000 right now. We can see that we were already at record low inventory when we started the year. This record low inventory is the result of, it's been true every year since 2011, the start of the recovery. The inventory has been declining each year in general. And the reason it has is during that time, mortgage rates have dropped ultra low, record low. And the low mortgage rates translate into super low holding costs for homeowners. So when I go to move, I want to move up or move down. It's a really good deal for me to not sell my home. That home has equity, my holding costs are very low, and the income potential has been very high. As a result, we see fewer and fewer homes on the market every year. You could see that changed a little bit at the beginning of 2019. Mortgage rates climbed in the third and fourth quarter of 2018. And so we started the first quarter of 2019 with a little bit more inventory than we had lately. Rates fell all last year, and we started 2020 with even fewer homes for sale. So we started record low. Now what's happening is typically you get inventory climbing through March, April, May to a June peak. You can see that happening year over year. The seasonality is very clear. In this year, we hit March, our turn, and then we turn sideways. And in fact, inventory is actually dropping, inching down week over week. We have new listings coming on, but the sales are actually outpacing the new listings. So each week we're ending up with fewer and fewer homes on the market. You can see on the bottom chart here, the far right to the orange dot, the last 3 weeks ticking up just a little bit more of inventory coming online. There are some signs that May inventory will start to free up and we'll start to get some more homes and therefore more transactions happening. Some of the states, including California, allowing more real estate transactions to take place. So as these things happen, more are going to come on. There's a lot of pent up demand as well as some supply. And so they're both going to come in very quickly. I shouldn't say very quickly. There are signs that May will have more, continue to have more inventory, but we're still way low. Beyond May, the one thing that we should all keep our eye on are the 3.8 million mortgages that are in the forbearance process. Forbearance is the negotiated agreement to not pay or delay paying a mortgage payment. This is importantly, these are not in default. They're not short sales, they're not upside down, they have equity. But there are 3.8 million of them. These will, for the first time, be, to the extent that they get listed for sale, would be the end of June. They were 90-day deals when they got negotiated to begin with. So middle of March, April, May, June. So by the end of June, you'll start to see one of a few different scenarios. One is that people will look and they'll say, I've got equity. The market, homes are selling, but I don't have a job. And those may opt to sell their home at that time. Take the cash. On the other hand, people need security and they're thinking about that. Some of the things that are driving our demand right now are home security and the safety needs. And so people don't really want to sell. So, but they're in a good space with super low rates. It's affordable as it can be, in a lot of equity. So they're actually in a strong homeowner position. So it could be that we don't see very many of these hit the market at all, but that's the key. If we look at the end of June and the economy feels worse and the outlook is less rosy, you can imagine that some of these folks are going to say, I'm going to sell my home now. What's interesting is because we are so low in inventory, most of that coming on could actually be a good sign for the market. It's healthy lots of transaction volume. There's buyers have options. Those are actually good, would be good signals. If there are, I can imagine other scenarios that would make it not good. If the economy feels really bad and lots of people feel like they need to sell and demand turns itself off entirely. I have a colleague, Dan Green at homebuyer.ai, who likes to point out that in 2008, in the heart of the mortgage crisis, even in 2008, there were 2.2 million first-time home buyers. And that time was when demand turned off as hard as it could turn off. And we still had 2.2 million first-time home buyers. So that says to me that when these come on, or if we have these mortgages that are currently in forbearance that are the direct result of the impact of this economic crisis, that those could be met with sufficient demand so that we don't end up in a plummeting home value environment. The scenarios to me seem like that plummeting home values are unlikely based on all of the factors that we're currently dealing with in the market. New listing volume is ticking up. It should continue to tick up in May. There are some signs that will happen. It'll be a little bit more healthy, more deals able to get done, and then we'll keep an eye out for those at the end of June. Let's switch from the supply side to the demand side. This is a chart which was brought to my attention by a colleague, Jesse Bodewine at Call Action. These are Google searches for all of the real estate, or couple of the real estate demand searches. Real estate market, buying a home in this case, but all the related searches have spiked since the crisis. You can see in this case, real estate market, boom, straight up. The buying a home is up in April. Look how strong it's up. This is the very right-hand side of this market. So this is 5 years of data, and all of a sudden, whoop, there's big increase in interest in buying a home. We can see the consumer interest in, for example, the Altos reports. So we send out hundreds of thousands of reports on behalf of our clients every week, and we could see April was the most views on those reports that we've ever had. Things like virtual tours are up, home search things are up, like all of those elements are up, and it's consumers who are looking for safety. They're thinking about long-term, they're thinking about home. And there are also some that appear to be looking for bargains. So there seem to be people on the sidelines with cash who it's been actually hard to buy a home in recent years because inventory has been so tight, competitive bidding, and that holds a lot of people back. And so there are those who have been waiting for bargains. I'm not convinced that we're going to see bargains necessarily, or at least in the amount that some of those buyers are hoping for. The other thing that's going on here is we have a generational impact. All of a sudden, our millennial buyers are now at their peak buying age. And interestingly, the younger people are in this. There's been some data that shows that younger folks are less afraid to transact now than the boomers who are older and hunkering down. It could be that this is an opportunity where these boomers who have been holding on to their properties because mortgage rates are so low, and the revenue on those places through rent or short-term rentals, Airbnb, has been high. It could be an opportunity that those properties are now coming online so that millennials finally have an opportunity to buy a home. The inventory may finally be there. The generational transition may finally be able to take be able to happen. It's been fascinating. So that the demand is for real. Here's another place where we measure demand in the Altos data. We like a stat where we track percentage of homes on the market that have taken a price reduction. It works like this. About a third of homes are overpriced when they get listed. Sometimes that's strategic, like, if we don't take a price cut, then it was underpriced when we listed it. Sometimes it's accidental, sometimes it's a wacky client. Whatever the reason, about a third take a price cut before they sell. And it's a rule of thumb at the national level. At the local level, some markets are higher than that. For example, Phoenix, it's closer to 40%. In the Bay Area, it's closer to 20%. But nationally, it's about a third. And you can see the seasonal changes, so that the spring happens, new listings come on. Everybody is testing the market. As the second quarter goes on, some of those say, wow, it's been on the market for 90 days. Now we want to maybe do a price cut. By the end of the summer, now we've got people who are like, oh, we got to sell before the holidays. And now they take even more price cuts. So you see the seasonal trend happening. In 2018, we already talked about this time, as interest rates were rising. 2018 went from a strong demand at the beginning of the year to a weaker demand in the fourth quarter of 2018. If you remember that time, there was a lot of bearish headlines. Then in January of 2019, rates started falling. And you can see the price cuts peaked lower last year than they did the year before, as rates were down and interest and buyer interest was higher. At the beginning of this year, we started in our normal strong range, right? It was a strong year, it was good demand. Prices at the beginning of March were on their normal take. They did their corner and they were starting to climb. And then boom, the market froze. It was really fascinating, because if we were in a mode where demand turns off, you also get a mode where the sellers know it, and they know it, and so they cut their price. But that didn't happen. And it didn't happen partly because it was a freeze, buyer freeze and seller freeze. We're just hanging out. But also because, as I mentioned before, actually transaction rate is outpacing new listings. Like, the inventory is decreasing. So we've been in this phenomenon where we haven't had to have price cuts. Like, the market is holding up. This actually bodes well for May. So if you think about it, houses on the market gets listed in March. It would take a price cut in April to sell in May. If now a house gets listed, it doesn't need a price cut in April, because there's demand and properties are moving. That means that the transactions that happen in May, June, July are based on the demand now. The demand now is pretty good, so the price cuts aren't happening. So this, having us have far below normal price cuts right now, means that transaction prices in May are likely supported. There's enough demand now that people are buying, they're shopping, sellers know they're shopping, they're getting ready to make offers, so that transactions that happen in May and June look to have their price support. So let's do one last look at supply and demand. At Altos Research, we do what we call the Market Action Index. This is an at-a-glance number answering the question, how's the market? When it's higher, the inventory is tighter, supply is lower, demand is high. When it falls, that means supply is increasing, demand is decreasing. And there's a number here, 30, which tells us above that is seller's market conditions and is generally correlated with rising prices in the future. Below 30 means that there's sufficient inventory and light enough demand that that it's buyer's opportunity, and it's generally correlated with flat to decreasing prices. We've been in sellers range for years. Inventory's been tight, rates have been low, the economy's been strong. Like, we've had all the conditions for seller opportunity and rising home prices. You can see here, so we like to display this in the speedometer so that you can see very quickly where it's going. You can watch it this month versus last month. And when you're working with clients, you can say, I want you to keep your eye on this one number. While we have your house listed, I want you to look at this one number. If this thing is falling when we have your house listed, that tells us the market is giving us a signal that demand is weakening and maybe we have to take action. Or likewise, if that number is climbing, that means demand is rising. So we can just do it. We don't have to spend a time with all the data, just this one number. When we look at it over time here in the chart, you can see the blue line, it bounces around every week. And the orange line is the smooth 90-day rolling average here. Climbs up and down each year, nice seasonality to it. We had a strong spring, demand climbing. And then all of a sudden in March, we had 1, 2, 3, 4 weeks down, just shoom, down. And it makes a hard turn in the chart. Now, what's happened in the last couple of weeks though, 1, 2, 3 weeks up, and they're converging. That implies that they're going to land here at about 40. That's safely in the seller's market zone. That's because inventory is tight, transactions are outpacing new supply. Like, those are seller's market conditions. Those are strong. Those are hold pricing robustly market conditions. As we go into June, and let's say we have a bunch of the mortgage in forbearance that come onto the market in big chunks, or let's say that demand dries up from here. In those cases, if that's the case, then we'll watch the blue line drop fast. We'll watch the orange line keep heading down, and if it approaches this 30 line way down here, actually, because we haven't been in these conditions in a long time, that's when we'd start to see be able to forecast prices declining. All right, as I mentioned, we are 1.5% below where we were last year. That was our March correction down, and normally home prices climb 3 to 4% in April. And they climbed 1.5% in April. So we took that initial haircut and they climbed, but not back out of not back to compare to a normal strong spring selling season. So those are the things we're going to keep our eye on there. We have 3 weeks of improvement on pricing. We see it in the supply and demand charts. We're in a seller's market, and we know that that there are fewer price reductions happening. So the May pricing looks pretty solid. Okay, let's do this. Let's switch over to the Altos product so that we can start here. We can look at the data in action. When you look at an Altos research report, this one is branded for Altos, but we brand them for our clients so that it's you sending your report to your contacts, your leads, and your database. But every Altos report has a bunch of features. First of all, it's readable, so it's not just about a bouncy chart. It actually tells us what's going on. The market action index is always the first thing that we look at. As I mentioned, it's at a glance. How is the market? We have all the data that lets you then lead into all the data. We can look at the chart of here's what's happening, or we can look at the long-term time series chart. We can switch that to look at inventory over time or days on market over time. I mean, we can look, if we're look closely here at the right side of this chart, we can see that in March, Home prices ticked down. Let me get the 90 out here. We ticked down in March, and then boom, we've started climbing back in April. This is Woodstock, Georgia. I just happened to have it up because I was working with a client this week. The other thing that we do in the Altos data is we look at every market by the quartiles. I mentioned the price range segments. In Woodstock, you can see that the high end of the market about 625, the low end of the market is more like 260. And then you can look and see days on market, 161 versus 56. What happens here is the high end of the market may be behaving very differently from the low end. And when you are working with a client, the client may say things like, well, I saw the house down the street and it took 6 months to sell. But we might be looking at your price range as actually the highest demand part of the market. It's only 56 days. So if you need to make an offer, if you want to buy a house, you need to make an offer now. This type of information is what helps clients see most clearly, helps them take action, especially when they're worried. What if the market is going to crash from here? How do I know that I need to make a strong offer? All of that is what we use in the data in this part of the story. The third thing on the Altos reports that I'd like to make sure everybody knows is the search box. The search box lets your users search any zip code anywhere in the country. You can, the beauty of this is that you can send them the Woodstock report. They go, oh yeah, well, I was thinking about Atlanta, and they could type in Atlanta. Or they say, I want to send this to my cousin, and they're in a different zip code. Anybody gets a report, they can search. And for user engagement, the search on an Altos leads to lead conversion. So we capture who's using the report and where they want to search. So that means that user is now part of your database and allows you to reach out to them with the latest data every week. All the data is refreshed every week. So it's always fresh. People always want to know. It's always allows you to stay in front of them. If we look at some of the others, reports that I just happened up, I was talking with a client in St. Petersburg. We can look at pricing in St. Petersburg, same thing, down in March, up in the last week. We can look at down here, we've got, top of the market is 1.1 million versus a couple 100,000. And you can see the days on market change here. You can see where the demand is. Looking at Austin, Texas, again, we had the March correction down. And so it's really interesting. Like the price strength is pretty much across the country. Here, the Austin market's a little tighter. So the high end of the market at 1.6 million is at 110 days, but still the low end, the entry part of the market, 50 days going very quickly. This probably jives with our first-time home buyers, with our millennial demand, which would imply that you're getting more demand at the lower end of the market. The Altos reports always have a search box and a share and a subscribe. The click to call button is really useful if they want to be able to chat with you on the fly. The share is a powerful feature. They click, they email it to their cousin. Now you know both them and the cousin so that you can reach out and communicate with the data they need. That's a whirlwind tour of the Altos reports, but it's how we see the data in action. I'm going to switch back right now to slides here. When we talk about sharing data with Altos, there are two big channels where we like to talk about reaching people. It's email and social. In Altos, we do the automatic email every week or every month or every quarter if you want it, but the data all comes out every week. And because it's market data, and especially right now, everybody wants to know what's going on. And as I mentioned, we had our highest report rate report read rate in April. People are engaged. And the Altos system allows you to track who's reading, track who's opening it, track who's sending it to their friends so that you know exactly who is interested in the data. And it's an opportunity for you to reach out and help them more. And maybe, for example, you see somebody who's all of a sudden reading a bunch of emails. It could be that somebody is worried about their job and they could be in a mortgage forbearance situation. And this might be your opportunity to help them in a time of crisis. And you would know it because they're reading their emails. They're opening up and they're diving into their Altos data. The other way is to reach people is through social. There's a couple of ways that we like to do it. One is with the share button, or you can just share a report right to Facebook or to Twitter, LinkedIn. And the way I like to talk about that is you say, this is our Woodstock market report for the week. Home prices are climbing, believe it or not. Inventory is super tight. Click here, see the whole report. By the way, use the search box to search anywhere. And when they use the search box, they've come now from your Facebook to your report, and then they convert as a lead on the report. So now they are in your contact database as somebody who wants to understand the real estate market. It's an easy, free Facebook share, social LinkedIn share, and it's allows you to get fresh content every week to as many people as you can. To enhance that, we have an ability of a feature for you to do one-click Facebook ads. This is because we know people need the data. We know they're searching for real estate data. We know they are in a mode where they have to understand what's going on. Running Facebook ads makes a lot of sense. The interesting thing that happens with Altos is that our system actually goes through the market data and writes the ad copy based on the local market conditions. So it won't say home prices are up unless home prices are up. Home prices are up and Woodstock inventory is tight this week. Click here to see the full report. When they do, they convert as a lead. Those are highly effective lead ads through Facebook, and they allow you to reach people who are interested at the top of the funnel, and it's a very affordable way, very easy one-click way to help people understand what's happening in the market, reach more of them. So that's the fast summary. Let me do a quick check on the questions. There are a couple of questions in here about the data. Best way to dive into the data is to go to altosresearch.com and book a strategy session. Just book a demo, go altosresearch.com, talk to one of our folks, book a strategy session. And when you do that, you can dive into your local market. You can talk about how the data works. You can look at the advanced features like, how do I look for the price of new listings? And we show you how to do that. And you can get that in your Altos account. Or how do I get to the price reductions? And remember that we're going to be watching the new listings. We're going to be watching the price reductions, and we're going to be watching the market action index. These are all your leading indicators for what's happening in the market. You know, because supply is so low, it's supporting home values. People need to understand that. And it's hard for some people to understand. So we're going to have to keep selling that and keep helping them see that. And if that changes, we want to be the first to know. And then finally, sharing the data helps your clients. It helps your sphere. We know that people need the information. We know that they're using it for safety and security feelings. And therefore, this is our ability to help people in this time of crisis. Really quickly, as I mentioned, if for the detailed questions on the data, how it works in your market, just go to the altosresearch.com and book a strategy session or the contact form. You can subscribe to our YouTube channel. We've been doing the market videos every week. They're a couple minutes long and say, here's what's happening to prices. Prices are up or down this week. Inventory is up or down. As I mentioned, May looks like we should be seeing inventory climb a little bit. Fingers crossed. We get some transactions happening in May. Or just drop a note to support at Altos or me personally, Mike at Altos. Happy to talk about any of the details. And so I am going to wrap it here, but I'm super grateful for you, for our clients, for this market, right? The people in this industry. We get to do this. We get to provide this as a service, and it feels like in a time of crisis, it feels like really a position of strength that we as professionals in this industry get to give to people. So let's keep giving it. So I'm grateful for you, and I look forward to talking with you more specifically. We'll probably do another one of these sessions in June to look at the latest from there. Be well, everyone.